Hello everyone and welcome to the Monday Open, hosted via the Vantage private client team. My name is Ollie and today I'm joined by Steve. How you going, Steve?
Hey Ollie, good afternoon everyone. I'm good.
Great to hear. Okay, so moving into the agenda for today. Starting off, we'll have a look at the previous week to highlight some of the major events and have a look at the key themes and see how prices moved as a result. Changing things up next, we're going to move into the tariff update section where we'll have a look at how prices reacted in the lead up to last week's tariff deadline day. Next, we'll move into this week's section where we'll put a focus on the key events for the week ahead and give our take on how this fits in with the major themes and where we think prices will go as a result. Lastly, we'll move into the technical corner where we'll put a spotlight on a couple different markets and analyze them using our technical indicators through a top-down analysis. So moving into the last week's section, as you guys can see on your screen, we've got your guys' most or top traded products for the week prior. Probably to the surprise of nobody, we've got a lot of US heavy markets in that in the list just here. Obviously, given we had the Fed meeting as well as a tariff deadline day. But how about you, Steve? Any surprises in there?
No real surprises with that. I mean, we saw with a lot of these sort of data points, especially the central bank's decision. So just going on to just last week. So we pretty much saw with the Bank of Canada, it was as expected, as well as Bank of Japan basically held the rates. But it was interesting to see with the United States Fed, so just seeing that they kept the rates at 4.5. Before the actual meeting, we actually saw that was about a 38% chance of a September rate cut, so 25 basis points. And then after this meeting, even though it was on hold, the indications from Jerome Powell, the chair, was pretty much that it was priced in that it was actually expected that it was more hawkish, so he had a more hawkish tone, and yeah, traders got a sort of indication as to where the sort of next rates will actually appear.
Yeah, Diddy was quite interesting as well. So we did have two of the Fed governors voted against the consensus and supported a rate cut. This was actually the first time this happened in over 3 decades. So I did actually have a look, saw some comments from Fed Governor Bowman after the fact, asking about her decision to vote against the consensus. So she cited a number of reasons, namely being the inflation moving considerably closer to their target, slowing economic growth and less dynamic labour market. So,
Yeah, I think it was really interesting to see, I guess, the sort of mandate that the US Fed are really focusing on. So I guess the sort of concerns they have is around the real impacts of the tariffs and how that's going to play into effect with inflation. So it was kind of about making sure that the employment numbers were steady, but really putting a focus on the inflation. But coming back to that sort of date, that sort of data set, we'll look at the Aussie. So the Aussie Consumer Price Index, so the CPI, which is the quarter on quarter. So the sort of expectations came out as predicted. So it was held as, so basically it was actually spot on with these sort of expectations. We also saw the trim mean. So the trim mean actually fell from 2.9 to 2.7, which is basically looking at the 70% mean. So removing the volatile sides of the negative and the positive by 15%. So just that median sort of 70%. And that was really driven by fruits and vegetables, so up by 4.3%, electricity, which was up by 8.1%, as long as, and rent, which was up by 1%. So that kind of ties into the sort of data that the RBA was really looking at. So we're probably looking at a priced in 25 basis points for the August meeting, which is going to be held on the 11th to the 12th of August. And then we're looking at probably the November, February, and May. So quite interesting with the CPI, as well as the China PMI data. So the Purchase Manufacturing Index, which saw weaker sort of data out of China, which kind of impacted the Aussie. But yeah, we then saw the US GDP, which was actually more than expected. So it came in at 3%, but I think it was actually skewed by a lot of the sort of tariffs. So there was, in the first quarter, we saw that there was a lot of freeloading from people importing to actually bypass the tariffs. And it was bolstered by a sharp reversal in trade flows skewed by the tariffs. So at the start of the year, obviously companies kind of rushing for products and just avoiding the actual tariff hikes. So it was interesting to see with that sort of data points. Then we went on to the sort of US employment data. So saw just the volatile week and just the impacts of how it impacted the DXY, or the US dollar. So we saw volatility throughout the week when it comes to the US dollar, especially the sort of non-farms, and then towards the end with the non-farm employment data.
Yeah, I actually did think it was quite interesting with the non-farm employment data towards the tail end of last week that we did see a 2.2% daily gain for gold, which was its largest daily gain since early June. So I think overall this did kind of contribute to a risk-off sentiment. So this was also largely underscored, or I guess really shown by gains on the yen and the Swiss. So both the yen and the Swiss both gained over 1.3% on the week. But I also do think the flows to the safe haven assets, such as the yen and the Swiss, as well as gold, is largely driven by the tariffs. So, as I'm sure we all know, tariff deadline day was on Friday. So, the rush to get all the deals done towards the end of the week did bring a lot of volatility. So, just to put a little bit of detail in terms of the deals agreed, the ongoing ones, and no deals reached. You can see all the rates just on the screen now, but I wanted to put a bit of a spotlight on the EU, or namely being the trade deal with the EU. Overall, I don't think the European markets really appreciated that deal. I don't think they really liked it at all from what I've seen. I think they were hoping for a deal closer towards 10% instead of the 15%, which was agreed. And as a result of that negative sentiment around that, we did see the euro struggle against major currencies broadly throughout the week. On the Monday, or I guess over the weekend when it was announced, the Monday session, we saw the euro drop against every major currency. The biggest drop coming against the USD, which is down 1.31% versus as well. Other notable gains were, other notable losses, sorry, we're seeing against the yen as a safe haven currency, down 0.83% on the day and down 1.49% week on week. As well, notable losses were also found against the pound, which was down 0.83% on the day, although it did recover somewhat during the week, down 0.16% week on week versus the pound for the euro. I do think this negative sentiment in particular weighed on the European equity markets. I think when the tariffs were first announced, they did get a little bit of a boost. Obviously, a big input of spending coming from the European Union. But the DAX in particular, I did notice, did take a big hit once that deal was reached. So for the week, it was down 3.52%. It was also shared on the French CAC, which was down 3.68% week on week, which was actually their worst performing weeks since late March this year. So clearly they didn't really take too well to that deal. Sticking into the Euro region as well, I wanted to put a bit of a spotlight on Switzerland as well, being one of the major economies of the world, which was hit with one of the highest tariffs. What do you think about that one?
Yeah, I thought it was pretty interesting that yeah, it was pretty much one of the second biggest out of the sort of main countries. And yeah, what I think about is I expect the US consumer to really dial back on the purchase of Rolex watches. So it'll be interesting to see how that translates. But yeah,
Maybe the
looking at
chocolate will get more expensive too.
yeah, with Brazil, obviously the sort of whether it's coffee as well as sort of chocolate. So I even heard, there was a complaint about one American saying that it went from $9 to $11. So it's interesting to see what the sort of impacts are with the sort of tariffs. But looking at that, it was pretty much as agreed. Like a lot of the countries got a blanket of 10%, or a little bit more. The impacts of, for example, at home, so Australia, considering that the sort of the meat, so the beef exports to the US, that's going to be impacted by about 10%. We're going to see Japan, South Korea, which is probably going to be costing more of the automotive, as well as the EU, which is going to also cross the automotive. We're also seeing that the Indonesia or Vietnam is impacting things like shoes, for example. But I also saw that with Brazil, so over the weekend, we actually saw that Brazil's actually opened its doors to China. So we're actually seeing 183 Brazil coffee sellers exporting to China's markets at the moment. So it kind of paves the way for probably a bit more growth across different economies like China as well as the other ones outside of US. So it'll be interesting to see how that translates. But yeah, as well as the sort of copper and pharmaceuticals deals. So it's interesting to see how the world's actually going to adapt post the tariffs.
Might be a little time until we see the data come out for the inflation on there. I also did find it quite interesting for copper in particular. It was a down nearly 22% day on day once they did announce that the refined copper was not included as part of that tariff. So it's like a lot of the stockpiles are still kind of sitting there collecting dust now. Okay, awesome. So moving into the week ahead. So Steve, did you want to take it on?
Yeah, so we've currently got bank holidays in Australia and Canada, which is actually going to impact the liquidity across a lot of sort of instruments that we're trading. So just be conscious that the volatility with low liquidity means that there's going to be more sharp movements. So be conscious that you'll see these sort of movements, especially in volatile currencies that are going to be the Aussie, the CAD, for example, as well as maybe gold, for example. The Bank of England, we're looking at expected that there's 25 basis cut to 4%. So there's, if we see this, it'll be interesting to see again with the statement that leads from the actual announcement and just see whether there's indication. I think there's expectations of probably another sort of rate cut by the end of the year. So it'll be interesting to see how we so with that. The main that I want to push the spotlight to is probably the US data. So considering what we saw towards the end of last week with the US data, it'll be interesting to see how everything backs up when it comes to the employment claims, as well as the ISM Services Purchasing Index, which basically looks at the companies. So it'll be interesting to see how we go from there. The Canadian unemployment rate as well as the change, quite high, but we'll see whether it's as expected or even better, hopefully. But the China data, we'll see also the Caxon. So the Caxon is basically a measure of how the actual businesses are performing within China, and we'll see the sort of sentiment that translates from that sort of data, as well as towards the midweek with imports and exports, and the consumer price index as well as producer price index later towards the end of the week.
All right, and it's also worth noting to all of our Aussie dollar traders that the China CPI and PPI does come out over the weekend. So it's definitely worth assessing your own risk management strategy if you are looking to hold any positions over the weekend, to potentially account for any volatility that comes out, depending on the data that we do see. All right, so moving into the technical section for the week, let me just share my screen with everyone. So, thought it'd be quite topical if we started off looking at the DXY, the US dollar index. So, I've started off here, US dollar index on the monthly chart. So, I've highlighted on here just where I blue line the 100 price point. Now, I've highlighted this as a relatively significant, not only psychologically significant, but just a very significant price point where we can see on multiple occasions over, well, I guess over multiple of years, how it has touched on this price point, traded around this price point. So we can see I've highlighted this price point back here from basically all of 2019, where we can see it did edge up towards this 100 price point, traded in a bit of a range. And now I wanted to highlight for where we are now. So we can see that in, looks like early 2022, we can see a sharp move above that 100 price point. It did go up, find resistance, and it traded back down. And it has traded down, tried to break below that 100 price point on the monthly on a multiple of occasions and has bounced up. However, it has had a lowering resistance price, obviously, by the exception of February this year, where we did see a rise followed by a steep decline below. We can see when it first did break down in May here, we can see it did try to push up, although it failed to close on the monthly and created a lower low on our monthly chart. And it's since been trading below the 100 price point in a range. So to get a bit of a better idea of what we are looking at, I'm going to have a look on the weekly. So we can see, as we highlight on the monthly, you see it did trade above, failed to consistently hold up, and it has traded back below the 100 price point. But where I do think this is quite significant is that I'm looking at the MACD line crossing over here, as well as our RSI sitting above its signal, which is indicating that there is some bullish momentum in this downward trending market overall. So I am looking for a seller. I am a seller in this market. However, I am seeing some short-term buying opportunities. And as a seller, I want to be selling the peaks. So from where I'm seeing here, we might have a little bit of a ways to go. Potentially, if we see it move up towards the 100 price point, if we see a break above and a failure to close, it would signal to me that the selling momentum is still very much in play. Also supported by our 50-day moving average just on here as well. And I think if we're moving into our daily chart for a little bit of further information, we can see it was largely on Friday where we did see it test this 100 price point, fail to close, and have a sharp decline through. So, and also see for the day now, we are trading up. And if we're looking at our most recent swing lows, we could see it as a rising support price where I think where the price is now, it is consistent of that trend. So I want to see how the prices move once it gets up towards the 100 mark. If we see a move up towards that and a failure to close above, I'll be looking at that for an opportunity to sell. The next one I wanted to have a look at was on Bitcoin. I want to have a look at the Bitcoin prices to see where we are for the moment. Now, we touched on Bitcoin a couple of weeks ago, so I thought it's worth having a quick look to assess where prices are now. So as we all know, we did see a test of the 120 mark, looks like mid last month. So it is an upward trading market. So we've got rising support prices coming on just above here. We can see a sharp move above this 116 price point, which I've highlighted as a significant price point. A sharp move above, and it has been a bit of a consolidation period, trading a little bit sideways. And then on Friday, we did see a steep drop below that 116 price point. So what traders might be looking at for here is a confirmation that the buying momentum is still in play. So as I said, we see a bit of a sideways trading market and a steep drop below. We can see it tested the 112 price point, although it failed to close and since traded back up. So for what traders are looking for now, I think if we see a move up towards a 116 price point and it fails to break above, we could see more downward pressure heading towards the 112. We can see a test. If we see a break below the 112, we could see it test towards 110. But once we do have a confirmation, once it's found a solid support level, we could see it retest up towards that 116 price and even challenge back up towards a psychologically significant 120K price point. Okay, so I think that brings us to the end of the video today. A recording of this video will be up on YouTube following the video, as well as posted in our VIP chat room, as well as Telegram. For anyone who's yet to check out our Telegram group or our VIP chat room, I would highly recommend it. Steve and I are in there all day, every day, answering questions, posting any articles, alongside a number of analysts from the Everest Fortune group. Well, I think that's all from me. Thank you, everyone, for watching, and Steve, I'll see you later.
Thank you, everyone. Enjoy that. Bye.
Cheers.